Hi and welcome to the Market Alert for Monday, the 30th of August. It's a bank holiday today, so the UK markets closed, the US open, and then the opposite next week, if I recall, is the pattern this time of year, but we'll confirm that later in the week or Monday next week. I'm going to have a few days off as it's a year since I actually didn't record every morning, so I'm going to have a few days off this week. And I will be back on Monday just to recharge the batteries. There's a lot going to be happening going forward, without a doubt. You can just get a sense of it just by looking at the news, all of the tapering and etc. Going on. So I'll spend the time just roaming around on the laptop and doing some research. But there's a sense that something big is coming down the line. You just get this feeling about it. Feelings don't mean a lot, I know, but sometimes a gut instinct about things actually is far superior to all the research that you could do in joining the dots, etc. So yeah, it just doesn't feel right, and it's not just me saying this. There's a sense of apprehension about the next few months. You know, we've seen the banks removing, or the likes of Marks and Spencer's, Tesco, etc. Closing their banks. There's something coming down the line. Anyway, let's have a look at Friday, because the market was waiting for Powell's comments from the Jackson Hole Symposium, and this is the headlines that were put out on Friday. Market reacts to Powell's dovish comments. Stock surge to record high, yields drop, dollar tumbles. And I do like these subheaders, and here it says, buy all things, just to keep the illusion alive. Dovish Powell sparks most painful melt up to 52nd year record high in 2021. Today was the 52nd all-time high for the S&P 500 in 2021. And you'll see why when you have a look at this chart here. You can see back in March of 2020, the Fed started printing trillions of dollars. You can see that we went from just over 4 trillion to where we're currently now over 8 trillion during the COVID pandemic. And you can see that we had the correction there in the S&P, and ever since then it's just followed the S&P and the balance sheet are just intertwined. That's how it works. And in fact, if you go back further in this chart, which is well worth looking at, you will see that same connection as well, where it's blatant now that the 120 billion per month that is being printed is finding its way into the stock market, supporting these asset prices. And this is why everybody's terrified of the tapering and waiting for the tapering, because they want to see how the market's going to react when its life support is removed, i.e. the Fed's 120 billion a month is what's supporting these asset bubbles. So there you can see it for yourself, and that's why the concern over the tapering. Wall Street reacts to Powell's dovish nothing burger speech. We think it's reasonable to expect tapering announcement in November. That seems to be the consensus at the moment, but it could easily be delayed if the post-Delta rebound takes longer than we expect. Like I say, there's something big coming down the line. We just got to wait and see what happens. Normally you would get, all crashes that have happened before generally have been in October, but that's too predictable. So it may be delayed until November before they actually start doing the tapering. But again, don't hold your breath. Don't hold your breath. They might not be able to do it. And Powell says it could be appropriate to begin tapering this year. In surprisingly dovish speech, if the economy evolved broadly as anticipated. No, it's not going to evolve broadly. It's just trying to get back on its feet after the 2020 COVID crisis. And then he says that it could be appropriate to start reducing the pace of asset purchases this year. No. And if you do, it's going to be fun. You have to go back to January 2018 when the market dropped 20% when they attempted it last time. Meanwhile, news, let's have a look for this week. Like I say, I'll be keeping an eye on things. So let's see what the big stuff is for this week. We've got non-farm on Friday. Now, that's thrown a spanner in the works. 750, 943. Yeah. See, this is the problem with when you're so close to this. You think, hang on a minute, I need to be I need to see this stuff. Yeah, okay. Let's see what happens during Friday. Probably, again, as the expression is, a nothing burger, but that's a big difference between projection and forecast there. So we'll see what goes on during the week. Like I say, I'll be keeping an eye on things, and we'll have a laptop. I don't know whether it records very well or not, but we'll see. But yeah, anyway, that's the big one for the week. I can't really see anything else in there that's going to really move the market. The usual economic stuff. We've got the ADP on Wednesday as well, and pending home sales would be an interesting one. That's out this afternoon anyway. They're showing a forecast of an increase on that one. Yeah, the big one for this week, Wednesday and Friday anyway. So let's have a look at Friday's action. We'll start off with the Dow, and you can see that the market moving higher in reaction to Powell's statement. No surprise really, because if he's delaying the tapering, well, that's positive, as you saw from the Fed's balance sheet, and the market stopping at 89 overnight. It's been the area of resistance for the market. See if it can get through here today. If it does, it goes to the all-time high. Electronic markets only for the UK pricing of the Dow and the DAX, and that should be enough if the Dow moves to the upside, of course, to take this out. If not, then you'll be looking for prices at the 20-bar moving average and maintaining the sideways range. In the 30-minute chart, you can see the market's reaction to Powell's comments on Friday. The market zooming up in the second hour of, or the second half an hour trading session on Friday there. And then once the news was out, the market just trading in a sideways range. Market showing a bit of a pullback at the moment through Friday's high and sitting there at the moment. Meanwhile, in the DAX, a very similar picture. As you can see there, the market attempting to move higher, but not back at the 89 yet for the DAX. The DAX is actually open today. It's just the UK bank holiday that is in play today. So again, there is the opportunity to trade back up to the 78% retracement. This will need to be taken out in order to move to the upside. Anything on the downside will be 20-bar moving average taken out, and this from this low to, well, you could actually just go to Friday's high. I can't draw the fibs on the daily because the retracement, because obviously it can make a new high, but these would be ballpark where the market could pull back to. But in the event that it's a bank holiday Monday, the pattern there, if you go back and do the research, generally the market moves to the upside because there is nobody selling into the market during the bank holidays. But it's only the one country, i.e. UK, that is the holiday today. Actually, just go back to this. We'll have a look at the 30-minute chart. Again, you can see Powell's comments there and the market's reaction. Overnight, prices gapped lower and have traded back in the 2-minute chart, trading back towards the close. But if we step back and have a look at the 30-minute chart, again, unlike like the Dow, you can see that we're heading back towards Friday's high that we need to take out there in order to move higher. So let's just go back to the 2-minute. There's a bit of volume around, not a great deal. I mean, the odd spike. I mean, you can't call it volume. I mean, just have a look at the scale. This is measured in ticks, so there's only 25 change in price at these volume spikes. But they're always interesting because they seem to happen at these sort of pivot areas or 200 MAs, etc., and BRNs. And then finally, the metals moving higher on Friday, given that the dollar moved lower. Depends whether the dollar gets support today. You can see there's some bit of weakness coming back into the silver market, but it's broken the 89% retracement, drawn from here to here, and then from here to here projected back. So you've got the downside fib support here, and then projected back you've got the 89 there. So this is an interesting area. Also close above the 20-bar moving average, which is crucial that this market holds at this time. But stuck in the sideways move, we have got a bit of a trend moving to the upside there at the moment, trying to make its way back. But we certainly need to take out the Sunday from a couple of weeks ago high, where they slammed the price down to 22.32. That needs to be taken out on the upside. Gold back at 89% to retracement, back through this on the overnight at the moment. This is drawn from here to that Sunday low, and there at the moment needs to stay above the 200 MA as well. The dollar is sitting at 89, so again you see the inverse relationship between gold dollar, both of them sitting at 89, one on the downside support in the dollar and in gold on the upside resistance. So we need a break in the dollar through here, and we need the gold market to break obviously to the upside to then have a look at this 89% to retracement from here, projected back to the upside there. And let me just go back to the 2-minute chart, and we'll have a quick look at Friday's trading session. The market, like I say, was waiting for the symposium comments from Powell. We did exactly what we did on Thursday. The market moved lower. We saw the buying coming into the market. The market reversed, and they brought it back, and then it just traded in an 89 pattern that you can see there before breaking a bit lower, and then through mid-morning the same thing, just sitting, treading water, waiting for Powell's comments. And then on Friday afternoon the market breaking to the upside there to the previous day's high, then pulling back to the 200 MA, massive volume there. Then the announcement by Powell, and this bringing the DAX along with it, not of any great numbers at all, 50-60 points there, unlike the Dow, and then pulling back again and just maintaining that sort of sideways move there until we see the overnight, which we've already looked at, where the market gapped a bit lower. Okay, that will do it for this one. Like I say, I'm going to try and have a break. I can't promise that, but we'll see how the week unfolds. Like I said, I'll be keeping an eye on things. It's just one of those things, if you're passionate about it, then it's very difficult to just walk away and leave it. But I will try and do that. Okay, as ever, thanks for watching, and I will see you in the next one.